Welcome everybody. Today we're going to be talking about the basics of personal taxes in Canada. So specifically, who needs to file a tax return each year, when are the returns due, and then we'll dive into how the taxes are calculated. So what's actually on the return. Who needs to file a tax return? In short, basically anybody over 18 should be filing a return. And then even if you're under 18, if you have enough income where you would be taxable, you would also need to file a tax return, okay? So just to clarify that, when you're over 18, I said everyone should be filing a return. That doesn't mean everyone technically needs to. If you are 20 years old and don't have a job and you're not taxable, technically you don't need to file a return, but you would want to file a return, okay? Everyone should be filing a return over 18. And the reason for that is you're either gonna fall into one of two camps. Either you're going to have income and be taxable and owe something, and if you don't file, then we're talking about penalties and interest and the government not being too happy with you. And secondly, if you're in the second camp, then you are not owing taxes, which means you are likely getting a refund or are entitled to certain tax credits. And you will not be getting those if you don't file a return, okay? A good example is people who make little to no income. Let's say you're 18, 19 years old, you might not even have a job at that point, so you might not think it's necessary to file a return. But what you might not be aware of is that there are certain credits that you only get if you file a tax return, okay? So a good example would be the GST credit, or in certain provinces, the climate action incentive. The government needs to have a tax return, needs to get your information so that they send out those credits. And if you don't file, you could be leaving hundreds of dollars on the table each year by not doing that, okay? Deadlines, when are the returns due? Well, there's two different things you need to remember when it comes to deadlines, okay? When are your returns due and when are the taxes due? Those are two separate things. When do I need to send in my tax return and when do I need to make a payment, okay? In terms of when are taxes due, for everybody, that's April 30th each year or the next business day if it falls on a weekend, for example, okay? And so it doesn't matter if you are self-employed or not, or whatever your situation is, if you owe taxes, they're due on April 30th. And if you don't make a payment by then they're gonna start accruing interest on that to the government, okay? So that's when the payment is due. Now, in terms of when your filing is due, that depends. If most people have a deadline of April 30th to file the return, so that matches their payment deadline, simple. However, if you are self-employed, have self-employed activities, or your spouse has self-employed activities, your filing deadline actually gets pushed off till June 15th, okay? And so you can file your return after April 30th without incurring any late filing penalties. But keep in mind, the payment deadline, as I mentioned earlier, is still April 30th. And so you could file on June 14th and pay your tax at that point in time. There won't be a late filing penalty, but there'd be interest on your balance owing for not having made the payment on or before April 30th. Okay, so keep that in mind. And like I said, if you have a spouse, you don't need to yourself have self-employed activity to fall in the June 15th deadline. If you have a spouse, then both your returns are deadlines are pushed, okay? How are taxes calculated? So I wanted to really kind of dive into, give everyone a general overview of what a tax return looks like, okay? And so the first section that we look at when you look at return is your income. And so when you prepare your return, you're basically just putting on there everything you earn during the year. And that could be, employment income, working somewhere, getting a T4, investment income, you have money in stocks, bonds, GICs, whatever, and you get interest or dividends. You might have a rental property that you collect rent income. Anything that you earn during the year needs to be put on your return as income, and you will need to pay tax on it, unless it's something that's exempt, which is kind of a rare case. I'm just talking about generalities at this point, okay? So that's the first section of your tax return. You put in all your income for the year to get to your total income, okay? And then there's a section there for deductions to get to your net income, okay? And if you look through that section, there's gonna be different things such as pension deductions. If you put money directly into a pension, that gets deducted from your overall income, so you don't pay tax on it. The tax are deferred till when you receive the pension, okay? Same thing with RRSPs. You put money in RRSPs, it reduces your total income to get to your net income. Childcare expenses, moving expenses, professional dues, there's a bunch of different deductions that can be claimed on your return. Those all reduce your total income to your net income, okay? And then there's another section to get to your taxable income that has a few different things such as loss carry forwards, northern resident deduction. Those are a little bit far and fewer between of what can be claimed on your return, but there are still there, okay? So there's a distinction between your total income, your net income after deductions, and then your taxable income after those other deductions from your return, okay? And those different amounts are used for different things. Some things will be based on your total income, others on your net income, and certain things on your taxable income, okay? And that's what taxes are calculated on. They're calculated on your taxable income. In Canada, we have a bracket system, right? For federal brackets, right now, 2023, 0 to 50, around, I'm rounding right now, but from 0 to 53,000-ish, you're paying 15% tax. 50 to 106, it's about 20.5%. 106, 165, 26, and then it goes up to 29 and 33%, okay? And then there's also provincial brackets. So depending on what province you live in at the end of the year, you also have to pay provincial taxes on that income. And the brackets and rates work the same as federally, but they'll be different based on what province you're in. So for example, here in Manitoba, brackets go from 0 to 37, 37 to 80, and then 80 plus, and the tax rates go from 11 to 17.5%, okay? And so when you look at your overall taxes, you have to look at your federal taxes and your provincial taxes to see what your overall tax rate is going to be. And so, for example, in Manitoba, that starts at 26%, goes all the way to 50.4% taxes on that income, okay? And something to note, a lot of people kind of don't necessarily understand, is that if the first bracket goes from 0 to 40,000, for example, and you have income of 42,000, not all your income gets taxed at that second bracket just because your income ends up being in the second bracket. Your income from 0 to 40,000 gets taxed at that lower rate, and only the few $1,000 above that bracket gets taxed at the next rate, okay? Hopefully that makes sense. We'll go over an example in a few minutes where we can show you the numbers and how exactly it works, okay? So you have your total income, we figure the taxes based on that, and then there's a separate calculation that gets done on your return as well for your tax credits, okay? And so we figure the income, but now we're looking at your tax credits. Okay? And so there's going to be federal tax credits and provincial tax credits to be applied against your federal and provincial taxes. Okay? So I'll just focus on looking at federal tax credits, and your provincial will work very similarly. There'll just be a little bit different amounts and different credits available depending on what province you're in. Okay? So when you look at your federal tax brackets, to start off with, everybody gets a basic personal amount. It can be different for certain people, but normally that's $15,000, okay? Credit. And then there's other things. You can have tax credits for adoption expenses, for if you qualify for the disability tax credit, you can get a credit for that. If you have tuition, medical expenses, donations, those are all things that get added on as a credit, okay? And so you add up all your tax credits for the year, your basic credit, your donations, your disability credit, whatever applies to you gets added on, and then you get a percentage of that to be then applied against your taxes owing, okay? So if your total federal tax credits came out to $20,000, for example, the federal tax credit rate is at 15%, okay? So $20,000, 15%, that's a $3,000 credit. That $3,000 is what reduces your taxes owing, okay? And so that $15,000, or if you had, tuition of $10,000, it doesn't save you $10,000 of taxes, it saves you $1,500 of taxes. Again, we'll go over an example in a couple, very soon, so we can take a look at that, okay, and really show you the breakdown of that. I touched upon the provincial, calculated the same way. Manitoba, the credit rate is 10.8%. Every province has their own credit rates based on what credits that you have on your return, okay? Finally, we have refundable credits, so things that get, so once you have your income, you figure out your taxes, you reduce it based on your tax credits, now you have the amount of taxes you owe, okay? And then you can apply your refundable credits. So certain things such as taxes withheld on your pay. If you work somewhere as an employee, they withhold taxes for you and submit that to the government on your behalf, so that your taxes should already be paid for you, right? So when you file your return, you can then see from your T4 how much taxes were withheld and send off to the government on your behalf, and that gets to reduce your taxes owing. There's gonna be other credits that you may or may not qualify for based on different factors. That's outside the scope of today's conversation, but certain things like Canada Workers Benefit, provincial, different provinces have provincial credits, those all go to help reduce your taxes. And these are refundable because even if you don't have taxes owing, these will be refunded to you versus the normal tax credits. If you don't have taxes owing, you can't use them, right? So that basic, for example, disability credit, if you have no income, disability credit doesn't actually save you anything. It only applies against taxes you have owing, okay? Now, let's go through an example so that everything I just said hopefully will make sense, okay? In this first example, we're paying a return for somebody who has total income of $80,000. So he works somewhere and he has income of $80,000, okay? And in this example, I don't know what province everyone is at. I don't know. We're just gonna use simple numbers, simple brackets so that it kind of flows nicely. But these are not the actual tax rates, actual brackets for any of the provinces. I'm just using this as an example, okay? And so in our example here, we're gonna use three different brackets, 0 to 40,000, which would be taxed at 5%. 40 to 60,000 would be taxed at 10%. 60,000 to 100 would be taxed at 15%. And then we don't care about brackets above that because we're already above what our income is, okay? And so if you look, with income of $80,000, we're well above the $40,000 and $60,000 brackets. So that means the full $40,000 gets taxed at 5%. That brings us to taxes owing of $2,000 on that slice of our income. The next $20,000 is getting taxed at 10%. So that's another $2,000 of taxes owing, okay? And then for that last bracket, $80,000 is $20,000 over that $60,000 bracket start. So we have another $20,000 of income being taxed at 15%. That gives us taxes owing of $3,000. And so if we add up all the taxes we have owing on that $80,000 of income, that gives us total taxes owing of $7,000, okay? Now, let's jump to the calculation with our credits. So again, we're going over a simple example. So we're gonna assume that the person has the basic credit of $15,000 and that this person has a little bit of tuition as well, okay? So $3,000 of tuition. So their total tax credits are $18,000. The tax credit rate, 15%, results in a tax credit of $2,700. So total taxes of $7,000, we deduct the tax credit that we get of $2,700. That gives us taxes owing of $4,300. Okay? At that point, we can apply whatever refundable credits we have. In this case, our employer throughout the year withheld $4,000 of taxes from our pay. And so we can claim that we've already paid that in, right? And so we're owing 43, we've already paid 4. So this person would be owing $300 when they file their tax return. Okay, so hopefully that all makes sense. I'll just run through another quick scenario this time. Same exact numbers, but the person put in $10,000 into our RSPs, and we'll see what kind of effect that has on the total taxes owing, okay? So same example, total income of $80,000. This time, we are claiming a deduction for RSPs contributed of $10,000, brings the total net income or taxable income to $70,000 in this case. And so if you look at the different brackets, same as before, 5, 10, 15%, we still have $2,000 of owing for income at that first bracket, still have $2,000 of taxes owing for income at that second bracket. But now we're looking at the third bracket, whereas before we had $3,000 of taxes owing. Now, because our total income is only $70,000, which is $10,000 over that bracket starting point, that brought our taxes down from the original $3,000 to now only being $1,500. So our total taxes owing are now $5,500. We have the same tax credits of $2,700. So now our total taxes owing went down from $4,300 to $2,800. So when we apply that $4,000 of taxes withheld, we're now getting a refund of $1,200 on that return. So as you can see, contributing $10,000 of RRSPs saved this particular person, or brought this person from owing $3,000 or $300 to getting a refund of $1,200. So a $1,500 savings, which if you look back at what that highest bracket was at, 15%, we made $10,000, it saved us at 15% because that's the bracket it was at, saved us $1,500. Okay, so hopefully that gives you a clear understanding of the different kind of general parts of the tax return and how something like RSPs get applied on your return. We'll have a different video that goes over all the different aspects of RSPs, so you can check that out later on after this, okay? A couple of things about the return. So when you file your return, you're not attaching any support to the return, right? You have donations, you just put a number on there. You have medical expense, you put a number on there. CRA will take your word for it. Unless they see anything kind of weird on the return, then they might ask you to send support. So you always want to make sure that if you're claiming anything on your return, like donations or medical, you keep the receipts so that, because you might get a letter later on from CRA saying, hey, we saw that you claimed, $3,000 of tuition. Send us the support for that so that we can confirm that it's accurate. And if you send it in, it matches, all is good. If you don't have that, you don't have that information to send in, then they'll deny it. They'll reassess your return as if you never had that credit, and you'll have to owe those taxes back to the government with interest on top, added on, okay? One question I get is, who should actually pay a professional to get their taxes done? I am a smart guy, I can do my own taxes. Why would I need to pay somebody else to do it? Well, really, like anything else in this world, anybody can do their own taxes. Like I can change my own oil or change my own tires. I choose not to for a couple of reasons, right? Just the time and expertise to do that isn't worth it typically for me to do certain things, such as a lot of people might not be interested in doing their own tax returns. The other problem with taxes is that you just don't know what you don't know. And so if you might do the return with all the information and it's done properly based on the information you inputted, but if you didn't know that you can still claim child fitness expenses in Manitoba, even though the federal credit was abolished years ago, then you might be missing out on that credit. There's also different things that could apply on your return that you might not be aware of. You put money in RSPs, you'll just claim it, but sometimes it makes sense to not claim all of it and carry some forward to a future year based on your tax brackets you're at. Certain things can be pooled between spouses. A good example would be medical expenses. People might not know that you can pool both spouses' medical expenses and claim it on one person. And even if they do know that, you might not be aware of who it'd be better to claim on. Some people will always put it on the higher income spouse because they're higher bracket, that makes more sense. When in fact, most times, and as a general rule, you want to claim on the lower income spouse because of different factors of how medical gets calculated. So there's all these little tips and tricks that you might not be aware of. So I would always recommend that you consult with a professional to make sure your tax are done properly. If you have any self-employed income, then that's a whole different ball of wax. You you definitely want to get a professional's advice on that, because there is a lot that you might not be aware of that you can claim and deduct on your return, or how exactly you go about that, okay? So I really hope that this video was very informative and helped you understand a little bit more about how your taxes get calculated and what goes into that. If you have any questions, let us know in the comments below and we'll do our best to reply. Thank you.